Good morning. This is a map, a chart of China's trading partners, the countries of the world. I've linked to it too, so you can see it more clearly on your screen probably, and also the source data. Now, imports from these countries inbound China are on the left side. Exports from China going out to those countries is on the right side. It's also grouped by continent and color-coded. The bottom part on the left, trade surplus. This means that China's trade surplus in 2022 is $857 billion. 857 more on the right side than on the left to make them balance. Asian countries are on top in red. We see that China is running a trade surplus with the rest of Asia. Europe is in light brown. China's trade surplus with Europe is enormous, running roughly 2 times trade going the other way, coming in. In purple is next, that's North America. This is even better for China, worse for us. In fact, China's total trade surplus in 2022 was $857 billion, and $576 billion of that was just from the United States. South America is in orange, and China runs a small trade deficit with South America. And that deficit with South America has grown in 2023, especially with Brazil and Chile. Oceania is in gray, and China has a small trade deficit also, more imports coming in than going out. And Africa, where China is in surplus again. Every day, all year long, China is running about $3 billion of trade surpluses with the United States. Their surpluses are also huge with the European Union. Call it $600 million per day or so in USD, but that trade will mainly be in euros. So these foreign currencies are pouring into China from North America and from Europe. Typically, a country would use these proceeds to buy assets there. The trade flows would be equaled on the other side by investments. China would take US dollars and buy treasury bonds, or buy land in the US to build a factory, or buys stock in US companies. That's where the dollars go. That's what Japan did with their surpluses. That's what South Korea did with theirs, and Germany and the UK. But China is not doing those things now with their trade surpluses. The United States is uninvestable, hostile even to friendly countries and companies who want to try to set up a factory there. So fixed asset investment is out for China. They're also dumping bonds, treasury securities. So they're not going to be buying more of those with the new $3 billion that they're going to be earning today and then again tomorrow. So where are those dollars going? These recent headlines here have posed a lot of questions. This was a confusing trade to people in the industry who are trying to figure it out. In the first quarter, China sold $53.3 billion in treasury and agency bonds. These are sales in the secondary market. China didn't simply say, let's allow these notes to mature and then we'll just take the dollars at maturity. They sold. They said, give me the market value for these instruments right now. They took losses on any bond or note where the market yield was higher than when they bought. And it's almost certainly true for this entire portfolio of bonds here. I don't care what anyone says. This is not so simple to understand what China's financial managers are thinking here. They were not dumping bonds to buy gold. They can use their own cash reserves to do that easily without losing money on bonds.